Tax Talk will not be seen tonight, so we can bring you this very special presentation live from Detroit. You're watching Tax Talk Live with Markwei Boye.
Do that. But what they fail to realize is if you have a business and your income and your expenses are equal, that means you have no earned income, but then you have a mortgage that you pay $12,000. You will be picked for audit automatically. It's just that simple. Why? Your income is $20,000. Your expenses is $18,000. That means you only made how much in profit? $2,000. But your mortgage shows $12,000 that you paid, and $6,000 in property taxes that you paid. That's $18,000. If you only made $2,000, how in the hell did you pay the $18,000? The government wants to know. So guess what? You'll be picked for audit automatically. So then, when you get picked for audit, what are they looking for? They're looking for three things. One, you better prove to them that you have some type of income that is not taxable. And that's what you use in paying those mortgages. Like life insurance benefit, child support, disability that is not taxable, or you have a great uncle called Sam that decided to give you free money, and that's how you paid it. If that is the case, you're okay. If not, then two things. You have only two scenarios at that point. One, either you over-reported your expenses, or you understated your what? Income. That's the only way. And if you overstated your expenses, by them taking it off, you will have less expenses, more income, so you will have more income to pay taxes, and they say, hey, this is why you were able to afford this. So now you owe us all this money for this deduction that you couldn't prove us. That's on the expense side. Or they will request your bank statement for that year. And when they request your bank statement, they are going to add up all your deposits. And when they add up all your deposits, it better add up to what you have reported. So if the deposit shows $50,000 and you only reported $20,000, you have a big problem. Because underreporting of income is fraud. And the only time you go to jail for income tax is when it is fraud. If you can't pay your taxes, that's not fraud, you just broke. Right? And that's the mistake a lot of people make when they deal with the IRS. When they are broke, they don't want to deal with the IRS at all. But guess what? When you are broke, that's when you deal with the IRS. Because they will not negotiate with you if they know you have the ability to do what? Pay it. So when Mark Mappin came and said, listen, I owe IRS so much from all these employees I had.
You can tell them. I don't have a problem.
Okay.
It's $250,000.
$250,000 because he had all these employees. He was paying, he's supposed to take taxes for Social Security and Medicare, and he wasn't doing none of that. He wasn't doing it because he didn't know me then, because if he did, he wouldn't be in that problem. Well, but he was broke and was trying to ignore the problem. I said, no, 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 no. When you don't have no money, that's when you talk to the IRS. So let's go there and let's make a case to them that you can afford it. And that's what they offer in compromise that you see on TV or penny on the dollar. That's what an offer in compromise is. It's not for everybody. It's not for everybody. It's for some people, but it's not for everybody. But they advertise it on TV as if it's for everybody. Now, it is too good to be true, and you have to think that, no, it can't be. Well, he didn't have anything. So I made a case to the government. I said, listen, you have 10 years to collect this money. After 10 years, it's over. Government has only 10 years to collect the money. And I'm telling them, this guy is really broke. So if you wait 10 years, you might end up not getting anything. So why don't we settle this $250,000 for $35,000 and you take it right now? And they looked at his whole financial situation. They said, this guy might have a point. So are we better off taking the $35,000 if you can get anything at all? They said yes. So we came from $250,000 to $35,000, and we have 90 days to pay that money. And we were struggling. We sent it in 2 days before. And that was it. It's over. So don't run away from it unless you are broke. Now, let me ask you a question. When you got picked for audit, did they request your bank statements?
Oh yeah, everything.
Everything.
Full cavity.
Yeah, they want your bank statement because it's a very easy target. Because if somebody writes you a business check, you cannot cash it. You have to deposit it first before you take it out. So there is an audit trail. That's the reason behind it. So finally, the government said, Michael, you're right. We might not be able to collect this money from this gentleman. We will settle. And they settled for $35,000. We paid it, and it's over. But there's one condition. You cannot owe for the next 5 years. If you owe, you go back to where you were. So what do I tell him? If you are a small business owner, you have to pay estimated taxes. Every quarter, you have to send your payment in so that you don't owe. And they do it diligently because I still come home. Because if you owe one of the 5 years, you're back to square one. Effort is wasted. So that answers the question for you.
Wait for the mic.
I'm sorry.
They said wait for the mic.
Okay.
Okay, I've been coming to these classes. I have great, and I'm gonna, I just don't come and stuff and don't do anything, right? So what would your suggestion be if, you want to do, like somebody wants to do like 3 businesses, as far as taxes, and I want to know how much money do a person need to make before they start worrying about the IRS questions? Because if because I believe that there are going to be people here that at one time they had one income and now it's going to triple or maybe quadruple because of different ideas that we get here come to these classes. So when do you think we should be worrying about the IRS, or should the small person that makes maybe $1,000 a week and they just start, should they be worrying about the IRS? You know what I'm saying? When should they start worrying about the IRS?
Well, that depends. It's a very, your question is a very, very open-ended question. And the reason why I say it's a very open-ended question is because it depends on how much money you make. So let's say you make $30,000.
For more information about Smart Business PLLC, contact Markwei Boye and the professionals at 248-395-3388.